Shares of Cisco are getting hammered in the pre-market this morning. The company told investors yesterday that sales this quarter will miss estimates by about $1 billion. It's a huge miss. For more on this major market-moving story, we've got Jim Kelleher of Argus Research. He is one of the most accurate analysts covering Cisco, making him a Bloomberg best. Jim, welcome back to the Inside Track. Let's talk about this term air pockets. John Chambers, the CEO, used it at least 10, maybe more times in the conference call yesterday, trying to persuade investors that this is effectively a transient, one-time event. Do you buy it?
I don't buy it because of some of the areas that were, and good morning, Eric. I don't buy it because some of the areas that were hit, such as state government, cable, MSO, these are areas that could continue to plague the company. The difficulty with the term air pockets, in the prior quarter, Cisco Chambers spoke of uncommon uncertainty, and that pattern of demand appeared to be impacting customers across the technology space. When you speak of air pockets, what you're really signaling is that your own sales and marketing team missed certain key signals and overplanned for a quarter that turned out to be a good bit weaker than anticipated.
Well, Jim, let's talk about some of those key signals, because to some people out there, they're as clear as day, right? We're talking about less spending by governments in southern and peripheral Europe. We're talking about less spending by municipalities and state governments here in the United States. We all know what kinds of pressures these governments are under. Should it surprise anybody at Cisco that they're spending less?
I guess Cisco anticipated that in certain markets, such as government, its good strength in federal U.S. could compensate for weakness at the state level, and that the good strength it did see in Germany, France, Netherlands, and the Nordic countries could compensate for the weakness in the peripheral or southern European nations. But ultimately, the spending in those areas was insufficient to compensate for the fairly substantial decline we saw at the government level.
All right, and there's this other side to it, which is cable set-top boxes. It seems, based on what we heard yesterday and what you wrote overnight in your note, that Cisco's getting beat on price by Motorola. Isn't that something that their channel checks should have revealed?
Yeah, absolutely. And the CEO called out both weak household formation as well as price competition. But, obviously, weak household formation is not a new event, so this business had been strong for 3 preceding quarters, according to the CEO. So really it does seem to be much more of an issue of price competition. And they took the unusual step of calling out Motorola. Now, Motorola, as you know, is getting ready to spin into 2 companies. The Motorola mobility business will consist of personal devices as well as the connected home. So perhaps Motorola was seeking to kind of hit the ground with a running start, so maybe they priced very competitively to build the business in advance of that split. But in any event, again, a failure on the Cisco sales team's part to anticipate and respond to this event in real time.
Jim, it is great to have you on the Inside Track reacting to the big news from Cisco. Jim Kelleher of Argus Research, he says he's not buying John Chambers' line that this is merely an air pocket. Cisco under pressure maybe for quarters to come.